Ambassador, just to pick up on our previous segment in terms of the view, we've got to fix inflation. It does impact everybody. If that's the case, and we do continue to see the U.S. Federal Reserve raise rates, what do you think that means from an investment perspective? We've actually seen the markets find some strength and some stability lately, believing that the U.S. Fed Reserve is going to pull back. We'll see what Canada does. What's your view on the markets these days?
So let's pause just a second and talk about risk, and then talk about long term versus short term. Long term, I would say there is no better or stronger economy in the world, and I think we're stronger yet on a relative basis relative to every other country in the world. You want to be invested in the United States of America. And 5 years from now, 10 years from now, and if you're young, 20 or 30 years from now, this will be an ideal time to put money to work. But if you're putting money to work that you're going to need next year, in 6 months or 8 months, there's a lot of risks out there. And, while I believe in the long-term market of the United States of America, short-term, we have a Fed raising rates quite a bit. We have a war going on in Europe. We have bouncing relationships with China taking place. You have the Middle East. You've got all kinds of things taking place. And then you have this confluence of now people starting to run for president, which is going to, I think, increase tensions domestically, politically. So there may be a bumpy road for the intermediate and short term in the stock market. And you'll have these rallies that'll come off of lows. And then when it looks like inflation's still chugging along and the Fed has to raise rates, more people act very surprised and the market will go down. I think you're very choppy here, very choppy near term. And look, some of these tech companies that are laying off that you've mentioned, they added tens of thousands of jobs over the last 48 months, 24 months, 12 months. And so during that time period, they went too far. And they hired way too many people thinking the economy was just going to keep extending at the path it was during, post-COVID or the end of COVID. And they're now realizing that things are not, and we may actually go to a recession. So they have too many employees and they're going to pull back. It's unfortunate for a number of people who took those jobs, and they're going to be impacted by it.
Yeah, fair point. So bumpy road ahead, but of course, the United States is still an incredible place to invest long term. Let's shift focus here a little bit and talk about the Canada-U.S. relations and your role in co-chairing the Canada Institute and what you're working on there. What are the key issues that Canadians need to know about right now?
So as a bit of background for everybody, the Canada Institute, which had its board meeting in Ottawa this last week, based in Washington, part of the Wilson Center, is one of a handful of countries that the President Wilson Center focus on. Nonpartisan, receives some funding from the U.S. government, also contributions. We at the board level, working with our executive director, Chris Sands, which many people in Canada know, are focused on the key issues that are critical to Canada and U.S. And that just covers the full spectrum of all the things. Our goal is to work on enhancing the Canada-U.S. relationship. We recognize how important it is to both Canada and the U.S., and we're supposed to help inform not only the government, but we're informing business and other communities. So those things focus on, this is the largest, richest trading relationship in the world, but we want to make sure that it's protected going forward. We saw a bumpy road in the NAFTA renegotiations. They could be bumpy coming up ahead as a new president or an old president coming back could have an impact on that. So these are the kinds of things that we're focused on: border, trade, geopolitical issues, role of Canada working with the U.S. It's a lot, and I'm really pleased to be a part of this organization.
It is a lot. I want to pick up on what you said in terms of nobody would be able to believe that we're actually going to be looking at NAFTA once again, and that there could be potential risk to NAFTA. Remember all the uncertainties surrounding the NAFTA renegotiations under President Trump. We're going to take a quick break in a few minutes or seconds, I should say. But what's the quick one-liner there? 2026?
All three countries have to sign on to affirm NAFTA in 2026. The risk is that Mexico is not holding up to the agreement, and somehow the U.S. doesn't sign on, and then messes this whole thing up a little bit.